Hemang, the real big block of constructive price action is the entire FMCG space. On a day when HUL, ITC, United Spirits, all three of them are up, the FMCG index will look good. But do you think somewhere the rally in FMCG is slightly overdone?
Well, no, Nikunj. I think FMCG, in fact, if you see last about couple of months, the outperformance has not been there at all. So the sense that one is getting is that over ownership issue is not there. Also on the GST front, we had a clutch of positives, and some of the companies, particularly the large ones, have reported slightly better volume growth. So what we feel is that yes, the outperformance looks quite difficult in the current scenario, but they will provide some kind of a stability. So if you see any kind of a correction from here on, that should be used as a buying opportunity, because you're looking at a slightly better volume growth, and if you have a better monsoon, obviously from the rural side you will see a decent performance coming in the next few quarters.
Right.
Okay, now I was just trying to scan through the valuations of HUL versus ITC, and historically if you look at HUL now, the stock is trading at something like 50x. ITC is trading at about 37x. The difference of course here is that for ITC the tobacco business has struggled, but for HUL their volume growth for the quarter gone by is not bad. Hemang, the other point which I want to discuss between HUL and ITC is that the P multiples over the years, they have expanded. I mean, HUL was trading at a P multiple of 44 times, now it is 50 times. ITC a year ago was trading at about 27 times, it is now trading at 37 times. So earnings have not expanded, and yet P multiples have expanded. So that's not a very good proposition. You normally want P multiples to move slower than the earnings, earnings recovery.
Yeah, what you're saying is right, Nikunj, that particularly for some of the FMCG companies, the entire re-rating has happened on the back of P expansion, and the earning has actually not supported that. But it's about the outlook that people have, that when we have seen a scenario where a large majority of small cap and mid caps have run up, and you're seeing companies which are not well known in the market quoting at about 20, 22, 25 times, where you're just building in a hope trade. Versus that, I think there are some investors who are looking at some kind of a revival in the category and who are willing to pay a slightly higher multiple. So I don't think this is a totally unnatural kind of a phenomena. And we have seen that they have generated decent return, though they may not have outperformed, but they have generated decent return, and there are a large number of investors who are willing to bet on a 12 to 15% kind of an upside. So I am a little uncomfortable with the valuations, but I don't think that these stocks will go down big time from current level, or there is going to be a major de-rating as such.
No, that being the case, at the current level, I mean today's rally in ITC is fairly exemplary. I mean, I know ITC has had these sporadic day spurts which have been fairly significant in the past as well. But given the trigger in GST, we're looking at ITC being the talk of the town in this session. So, from a value adjusted reward bias, do you believe that at 303, ITC could be a compelling buy? More than an HUL, actually, that's the extended part of the question.
Well, Tanvir, I think part of the upside that we are seeing in ITC and to some extent in United Spirits is because of some kind of relief which has come in versus what the market was expecting in terms of GST. Particularly UNSP, I think what has come out is a big positive surprise. So I am not really of the view that this upside is sustainable beyond maybe another 3, 4, 5%. The risk reward from current levels for new investment into either ITC or HUL is something that I would not advise. But we have to remember that these are positives. So if at any given opportunity when you see correction in the market, one can really think of participating in it. Particularly HUL is something that we are extremely positive on. Though the valuations are on a higher side, we think that the volume growth is sustainable at about 4 to 5%. So, another 4 to 5% cut would make the stock attractive for a 12-15% kind of an upside.
I think Bank of India post its numbers is also cracked, and that's the other part of the discussion that we wanted to have today. all of the PSU banks are slipping in this session. Is the PSU bank rally waning? Something that we saw, for the better part of this year, particularly in the last 2 months. Hemang, what's your sense? Big cracks opening up across the PSU lot?
Yes, Tanvir, I think barring SBI, most of the PSU banks, if you see their numbers, there is hardly any kind of a comfort in terms of the core operating profit or gross NPLs. The provisioning is on a higher side, particularly for Bank of India. We can see that the provisioning is high to the tune of about 101%. So the sense that one is getting is that, the entire optimism which was there was mainly because of some kind of, treasury gains and some steps which the government has taken to resolve this NPL issue. But in terms of core operating performance, a sustained revival, we are a little away from that. So I think that, and even the management outlook, even for State Bank, in terms of the asset quality or growth going ahead is not looking that promising. So I think there is going to be some kind of a profit booking and underperformance from the entire PSU bank, and the only the stock that we have a lot of comfort on is State Bank of India. So if there is any correction, we could look at buying only into that one.
On the aviation side, I don't think they've seen very many high-flying days after the rally that we witnessed through March. Is the call one of still conviction in this sector, Hemang?
Tanvir, we have actually avoided, giving any specific buy view on any of the aviation stocks, and we believe that the earnings volatility there is, too much. The dependence on the crude price is too much, and somehow, because of the season being good in terms of the holidays, etc., some of them could report, good traffic growth. But overall, we don't think that these are the pockets which will give you the, kind of significant investment appreciation over a period of time. So we would avoid recommending any, buys in any of the aviation stocks at this point of time.
Okay, and Tata Motor numbers tomorrow, Hemang. Are we in for another nasty shock? I mean, last time along with the numbers, they shared their entire hedging policy, and which in a sense, made a lot of long-term investors nervous about Tata Motors prospects.
See, Nikunj, on the operating profit margin front, we do not expect any negative surprise on the currency front per se. But if you look at the JLR part, particularly on the Land Rover part, the numbers have not been that great. So versus the market expectations, you might expect some, muted kind of a top line. But on the operating performance front, we think that it should be quite stable. Also, we have to reckon that the stock has been a big underperformer. It has actually corrected from the top about 20-22%. So I am not too negative on the stock per se from this quarterly numbers perspective.
Hemang, just one final word from the auto pack. Where is your bias? What is it? What is your top pick?
We continue to like Mahindra and Maruti, and even Tata Motors. After this correction, we have a positive view on that. So we think that the overall growth story continues to be good. GST has not been, that big a positive for the auto pack overall. But we think that Mahindra from a, risk reward or valuation perspective continues to look good. Particularly on the tractor side, we think that, there is going to be a good momentum that could come through. So we like Mahindra for another probably 12 to 15% kind of an upside from current levels.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.